Hi, welcome to Neppy Invest. Buy the dip, don't catch a falling knife. So who's heard those two pieces of advice, or who has even been given those two pieces of advice? So these both seem to be contradicting each other, because buy the dip is saying if you see the share price drop, that's when you buy, while don't catch a falling knife is saying if you see the share price drop, you don't buy because it has more room to drop even further. Now, the way I look at both those two pieces of advice is for completely different scenarios. For instance, in buy the dip sort of scenarios is when a company's share price is in an uptrend, and you'll see occasionally the share price dip towards support, and that is the time you buy, or you might think of buying. Now, when you're talking about don't catch a falling knife, that is subtly different. That is when the share price has dropped a fair bit in a very short period of time, for say maybe 20% in one day. And usually it's on the back of maybe some negative news, a profit downgrade, or something similar to that. And in those sort of situations, don't catch a falling knife is just saying there's way more room for the share price to drop even further. There's too much risk, that sort of thing. Just be patient and just see what happens with the share price over the short to medium term. So I use both pieces of advice. I do buy the dips, and I'll also try not to catch a falling knife. It is hard sometimes because it is quite tempting, especially when a company you like, you see the share price drop by 20, 30%, and you just think now's the time to buy because it's quite a bit cheaper than it was a few days before. So the 10 companies I'm going to be talking about today have seen their share price drop by about 30%, some a little bit more, in fact some 50%, and some not quite as much. Now, the whole point of me doing this video is to disseminate or share ideas. So it's not about advice. I can't give advice, but I can share you ideas. So some of these companies I have no intention of buying, but just because I have no intention of buying doesn't mean you don't have to have, you don't have to buy it. So I think my whole point is everyone should have their own investment strategy. Everyone's investing strategy should be different from each other. In fact, I really, really hate when you listen to experts or professionals and they talk about their own sort of investing strategy as being the one and only investing strategy everyone should embrace. In fact, I was listening to Phil Town the other day. He's a Warren Buffett disciple. In fact, I wouldn't be surprised to see Phil Town have a Warren Buffett shrine on his wall somewhere. But the other day I was listening to one of his podcasts. He just mentioned there's only one way to invest, and that's his way, or Warren Buffett's way. And I disagree with that. I think everyone should find their own light. And when I'm talking about light, I'm talking about investing strategy, because my investing strategy may not be suited to your investing style, or it's not very suited to Phil Town's investing style. And just like his investing style is not very well suited to the way I invest. So everyone should find what's comfortable for them and invest that way. And that way, that's when you can have the most success. So in that, let's get into the companies I'll be talking about today, all 10 of them. And I'll start with the lowest market cap company, which is McPhersons or McPhersons. The share price of this company is down 54% in 3 months. Now, this is a situation where we saw the share price go into a downtrend before the big news or the reason behind that downtrend, or maybe it is the reason. But we saw the share price hover around $3 up until mid-October, and then the share price went into a downtrend. In fact, the share price went from $3 all the way down to less than $2 before any sort of negative news. And then we got the trading update on the 1st of December 2020, which was a negative trading update. Have a look at that online somewhere and you can see how negative. A lot of volume, you can see a massive volume spike there. But ever since that trading update, the share price has just gone sideways. So this was a case of, even though I would suggest don't catch a falling knife, this was a situation where catching a falling knife might have worked out in the long term, but you never know what's going to happen in the future. They could have another negative trading update, or although they released a trading update on the 21st of December saying everything was going to plan and reconfirming their trading update from the 1st of December. But what I've been seeing in the last few weeks is a consolidating base forming in the share price. So that's the share price going sideways. And I'd like to see that play out for the next few months, because when you see the share price dropping 54% in 3 months, there's going to be a lot of resistance for the share price moving forward, because anyone buying, between mid-October and when the share price got to about $2 in that zone there, a lot of those shareholders who are hanging on now will want to sell out of this dog of a stock. And they'll be looking for the share price to rise. If the share price rose to about $2, they'll be wanting to sell out. So there's a lot of resistance to the share price rising. So I think this has a long-term or lot of time to play out, which with McPhersons. And I wouldn't be surprised to see this play out for another 6 or 9 months, potentially even a year, because those moving averages still have to come down a fair bit before I get interested. So what I'm looking for is this base to play out, the moving averages to come together, and then we'll start to see the share price go above the moving averages, and then the moving averages can go up. And that's the beginning of an uptrend, and that's when you want to buy in. Clover Corporation. This is a company I actually have owned in the past. The reason I sold out of this company was the operating cash flow couldn't really justify the market cap. And the market cap, which is now 263, was significantly higher than it was when I sold out. And this is another instance where the market, had this foresight. I don't want to say it can see in the future, but we saw the share price of Clover move into a downtrend just before the trading update, which was released on the 20th of October. And that trading update was fairly negative. You can see expected revenues to be down 15 to 25% on the first half of the previous year. And ever since then, we have seen the downtrend play out. The share price has been drifting lower. Occasionally, you'll see the share price go up, but every single time it goes up, it's been on low volume. And right now, the close of trading on the 4th or 13th of January, share price finished at $1.46, which was the 6-month low. So this still has room to move downward over the next few months. And again, this is on my watch list just to see it play out, or how it plays out over the next few months. So I'm still do like this company. I do like what they do, but again, there is a price at which I'm willing to buy in. And at this time, it's not $1.46, just because it has room to move down. Service Stream down 30% in 1 month. This is something I'm not understanding. It's not really a company I've been following all that closely. It looked like there was a good uptrend developing from late September, and that was playing out to middle of December. And then they released an announcement on the 16th of December about an agreement with NBN. Seemed like initially when that agreement was announced, the market liked it. The share price did go up on that day. But then someone saw something they didn't like, or I don't know what, and then the share price fell 12% during that day, and then the next day it dropped another 12%, and ever since then it's just been drifting downward. So I'm not sure why. Maybe if you are a Service Stream holder, or you know a little bit more than I do about this company, why did this announcement cause the share price to drop a lot? It seemed like a positive announcement on first glance, but just because on first glance it might seem positive doesn't mean it is. There is something at play here that has the market spooked, and just what that is, I don't know. So again, I'll put this onto my watch list just to see how it plays out in the future. If you think the market is wrong, this could be a good buy for you, but I always hesitant to think the market is wrong. Tyro. So this is a company I have no intentions of buying, but it's been in the news recently, and we have seen the share price drop 31% in 2 months. So they are in the solution payment sort of sector. They had issues with their FPOS terminals having connectivity issues. A few businesses saying they're now moving to their competitor. And the competitor is fairly famous. I forget what they are, but they're pretty big in America, and they're making headway here. It seems again the market had some sort of maybe you can see in the future the market, because before these issues the market was, or the share price developed into a downtrend, and it just continued a downtrend with this news. So at this point in time, look, I'm put into my watch list just again to see how this plays out in the future. I have no intentions of buying Tyro, even if the share price drops another 50% from where it is now. I did hear that Ben Clark from, I forget who Ben Clark works for, he's fairly bullish on Tyro, but if you're a big follower of Ben Clark, maybe you would like Tyro. So this is an idea for you if you like this sort of area, and if you like Tyro. For me, it's a no. Polynovo. I've just did a video recently, a few days ago, about Polynovo because of their trading update. I think very highly of Polynovo, what they're doing for humanity. They're improving the way we live, especially for those burn victims. Burn treatment has not had any advancements for 50 years or so. We saw this Polynovo share price was in a really good uptrend from October all the way through to late December. Share price went from $2.25 to $4. It had struggled to get above $4. And then on 4 trading days, share price just dropped. And those were the 4 trading days before the trading update on the 12th of January. So again, maybe the market had some sort of foresight. Maybe there was some loose lips with Polynovo. Someone was spreading some rumors or something like that. But the market really just decided to sell out of Polynovo. And then the trading update happened. The share price dropped a substantial amount. And then the next day, or the next trading day after the release of the trading update, share price dropped another 10%. So I'm fairly high on Polynovo, but I'm fairly low on the valuation. So market cap 1.8 billion on revenue of 22 million, operating cash flow negative to the tune of 400,000. I do have my limits when it comes to buying in the company I really, really like, and Polynovo valuation has always exceeded those limits. So ideally for me, I'd like to see the share price drop substantially more than it is now. More than likely, we'll see a dead cat bounce because this is definitely an oversold territory. And a dead cat bounce just means the share price will probably go up for like a week or so. More than likely, it's going to be on low volume. And if it does go up on low volume, that is sort of confirmation of a dead cat bounce, which would mean share price will go lower over time. So I'll be looking for an entry point in the future at a much lower price than it is now, which would not be good news for current holders. But again, I'm being a little bit selfish and just thinking about my own portfolio. Pushpay is an example of a situation I don't understand why the share price is dropping. I do have some conjectures, some hypotheses on why it is dropping. Just because I do have those thoughts doesn't mean they're right. So Pushpay's share price has dropped 33% in 2 months, even though over the past few months they have released some positive news. In fact, they released a positive news update or guidance upgrade on the 12th of January. But the market just did not take to that. In fact, usually when a company issues a guidance upgrade, the market loves it and you see the share price take off. It did not happen. Share price is still falling. So what I'm thinking is Pushpay is in the sort of the online donations for mega churches in the United States. So you get these people who go to churches who donate, and they can do it online now through Pushpay. And they can do that at home, all those sort of things. And I'm thinking maybe the market is just thinking that with the vaccine coming through into Southern America or southern parts of the United States, that people won't be donating online anymore. They'll go back to the mega church and just put their $10 into the thing they carry around in the church, that sort of thing. So go back to the way they used to do it. And even though they gave a guidance upgrade, the market's thinking the performance of Pushpay will underperform over the next year or so. That's why the market is saying or pushing the share price lower. That's just a thought. It doesn't mean it has to be right. If you are a Pushpay owner or know a little bit more than Pushpay than I do, maybe leave a comment and maybe you can teach us why the Pushpay share price is going lower. Doesn't make sense to me, but that's just me. Appen. So this was a long-term hold for me. It was in my long-term portfolio for a long time. Then I made a slight shift in the way I look at my portfolios. So it came a point where there was a comment in one of my videos which said, is it time to buy Appen? This was when the share price was around $30 or $32 or something like that. And I said, if I was a trader, I wouldn't buy, I would sell out. And then it got me thinking, what if I can combine my technical analysis skills to my long-term portfolio? And that would mean I'd have to sell out of Appen at around $32 or so. And so I did. I just followed through with that, which was a very sad day. And ever since I sold out, the share price keeps dropping. They did a trading update on the 10th of December. and we're just seeing the share price just continually dropping. And share price, last time I looked at the close of trading on the 13th of January was $22.52. The further this falls, the more attractive it becomes. But again, I don't want to buy in just because the share price is getting a little bit towards the area I would like to buy in at, and simply because this has more room to fall, just because if you look at the chart, it's still dropping. Now, just because I won't buy, if you do your valuations, Appen, if you've been wanting to buy Appen, this could be the price to buy in. You can see the peak in share price was about $43 in August. It's almost fallen 50% since then. So this has fallen a long way since mid-August. The business hasn't changed that much. It still has long-term growth possibilities here. I think this has room to grow substantially more. It is operating cash flow positive, generating good returns on revenue. Revenue's growing quite substantially. So I might miss the boat here. This could be the low, but I'm more willing just to be patient, wait for the trend to change, wait for some positive news, and then jump aboard. Altium, another company I held for a very long time, and then I sold out just because it was just really, I couldn't justify the valuation here. This is one company where I just sold out because of valuation. Probably shouldn't do that. And ever since then, we have seen the share price drop lower. So share price was as high as $40 in mid-October. And in the last month or so, it has dropped 25%. Just like Polynovo, the share price drops over the past 6 or 7 trading days has been quite substantial, that I wouldn't be surprised to see a bit of a dead cat bounce in here. So a dead cat bounce trade is a possibility. I don't do those trades. But trading update, again, this is a situation where the market saw a trading update before it happens. They released a trading update on the 12th of January. In fact, they're expecting first half revenues to be on a decline. But Altium is the business or sort of business where management is very bullish about the long-term potential of the company. In fact, their goals, I think it's 2025 goals, are quite bullish, fairly lofty goals they have. And if they can succeed in achieving those goals, more than likely the share price is going to be substantially higher than it is now. But it's a big if, because I think they just failed on their goals for 2020. I'm trying to remember now. But again, this is a situation where the more the share price drops, the more attractive it becomes. And just timing your buys here, especially if you're not like me, for me, I'm just going to be willing to be patient, look for a change in trend. If your investing strategy is just buying when the valuation becomes pretty good for you, maybe now is a good time to buy, or just to maybe be a little bit more patient, just see where share price goes over the next few weeks or so. You can see a lot of selling in the last 4 or 5 days, very high volumes. So there's been, I think, quite a few fund managers probably selling out at the moment. You can see the last two trading days have been very interesting. On the day of release of the announcement, the 12th of January, there was a fight between the bulls and the bears, and that's why the share price didn't drop all that much during the day, because of the fighting between the bulls and bears. But on the subsequent trading day, on the 13th of January, the share price actually dropped 6%. So the bears definitely won the battle on the 13th of January, with the share price dropping 6%. A2 Milk. This is probably a big mistake, a big learning curve for me, and I think I could have saved a lot of money if I used my technical analysis or skills into just sort of use that in the way I looked at A2 Milk, especially in August. I would have sold out of A2 Milk around late August when we saw the share price go into a downtrend. And again, the market saw these trading updates, these negative trading updates before they happen. This is why when a company goes into a downtrend, enters into a downtrend, it's a good sign that the market is seeing something that you may not be seeing. And we've had 2 negative trading updates. Since then, share price has dropped 47% in 5 months. So I could have saved a lot of money if I sold out then. And I would not be buying this if I was not a holder of A2 Milk, just because there has a lot of room to go down from here. $10, hopefully that's a good price of support. That's where we did see the share price drop on the second trading day or trading update on the 18th of December. It's been drifting towards $10 since then, over the last few weeks. I think if it hits $10 and bounce off, that would be quite bullish, and that would be a good trading potential, trading point or buy-in. But again, this has the room to move further down. It could go to $9, $8. And until I see signs of a turnaround in the share price, there's no point me buying any more. So I've missed my boat in selling this, and let's keep holding it because I'm still fairly bullish on the long-term future of A2 milk. Wouldn't be surprised to see A2 milk get back to $20 in 2 or 3 years and then go well above $20 because they still have significant growth in their milk categories in the United States, and even in China. I think the story hasn't played out at all. Cochlear. So this is probably the one situation, all the other companies, maybe you could say those don't catch the falling knife scenarios. This is maybe more of the buy the dip. This is a very big dip though. Share price has gone down 24% in 2 months. So I'm a very big fan of Cochlear and what they do. I'm not the biggest fan of the business itself because it is significantly overvalued, in my opinion anyway. But they do have a lot of room for growth. In fact, I was listening to one podcast about 3 or 4 months ago, and it was a value investing podcast, and they were talking to someone in Australia, and the person, actually this was an Australian podcast, so it makes sense they were talking to someone in Australia. But the presenters asked these two guests to name the good value play, and one of them said Seek, and the one said Cochlear, and I just went, those aren't value investing plays, Seek and Cochlear. In fact, the other end of the value play. Anyway, share price has dropped 24% in 2 months. I was trying to look for some sort of catalyst behind the fall in the share price, and I couldn't find anything. So if you are a Cochlear shareholder or you know a lot about Cochlear, maybe leave us something in the comment section to suggest why this share price has dropped 24%. If there's no reason why, this could be just the ebb and flow of the share price of a company, and this could be buy the dip sort of scenario. Otherwise, I'm going to keep a close eye on Cochlear moving forward, and just to go online, look at some YouTube videos of young children who get cochlear implants and can hear their parents for the very first time. And if you need some sort of uplift in your life, look at those sort of videos because Cochlear are doing wonderful things for humanity. So that comes to the end of my video. Is it now time to buy these ASX stocks? So I'll leave it up to you to decide whether it's time to buy or not. I'm not a financial advisor, and that's why I'm not going to give you any advice. This is all about sharing ideas, and I hope I've shared some ideas or given you some inspiration for future purchases, or maybe not future purchases. Maybe you decided to sell some of these stocks. That's a possibility as well. Otherwise, again, I'm not a financial advisor. If you do need some financial advice, make sure you seek out someone who is qualified. I am not qualified. I'm just doing this for research purposes, entertainment purposes. I hope I'm entertaining, and educational purposes, and again, to share ideas. That's all for today. Have a good day. Bye.